Hello everyone, welcome to Go Capital. Previously, I showed you this pattern you see on the screen. Today, I will explain what it means and how to identify it in the financial market. This is the structure of an uptrending market. The manner is such that the price will move from a low price in the market to a high price. Then it will return to a lower price, which is higher than the previous low price. Now, when it returns, it will be to a previous key price level as well, not a random level. This will continue till it gets to the top of the price chart. Now pay attention. At the top, wait for a shift in market structure. What does that mean? A market structure shift is represented by a level on the price chart where the previous trend is broken. That means the uptrend structure has to be broken downward to create a low price level that is lower than the previous low. A return to this level is a signal to enter a sell position. You should sell from here to a lower low or bottom of the price chart. Note 1. Observe that before the shift in market structure occurs, there is the formation of equal highs at the top. 2. Observe that there is a fair value gap, an imbalance, and liquidity pool at the bottom. This is the reason we believed that the price would continue lower. The reverse will be the case for a buy position. This is the structure of a downtrending market. The manner is such that price will move from a high price in the market to a low price. Then it will return to a higher price, which is lower than the previous high price. This will continue till it gets to the bottom of the price chart. Now pay attention. At the bottom, wait for a shift in market structure. What does that mean? A market structure shift is represented by a level on the chart where the previous trend is broken. That means the downtrend structure has to be broken upward to create a high price level that is higher than the previous high. A return to this level is a signal to enter a buy position. You should buy from here to the next high or top of the price chart. Note: observe that before the shift in market structure occurred, there is the formation of equal lows at the bottom. 2. Observe that there is a fair value gap, an imbalance, and liquidity pool at the top. This is the reason we believe that the price would continue higher. If you find this video helpful, please click on the like button, share it to your friends, and kindly subscribe if you have not subscribed to get more content like this. Thank you for watching.